The 3 down days of death have shown up on the stock market. Now we've got a massive 24 hours ahead of us with Bitcoin also pumping to $67,000, and it could potentially be sealing the deal for the next leg to the upside. But it's not going to happen straight away, and I'll show you why in today's video, along with the economic data, the stock markets, and some altcoins. Make sure you hit that like button and subscribe if you haven't already. It's your home of macro cycle analysis with me, Jason Pizzino. We're looking at Bitcoin, cryptos, the stock markets, and the real estate cycle, the biggest market in the world. Let's kick it off with the links in the video description today. There is a sale coming up this week. Subscribe to the free crypto and economic report, and you will be advised when that goes live. All right, guys, our agenda today. We've got the stock market correction after significant bullish data came out last week. What a time that was to get all of those last bulls offside. I'll get into that in just a little more detail. We've got the market sentiment to go through, Bitcoin market sentiment, historical seasonality of Bitcoin for this second half of 2024, Ethereum, Solana price analysis, and I might squeeze one or two more in there if you are lucky, and the altcoin season, ready to catch everyone off guard. All right, let's have a roundup of the week as the S&P has closed out another down day. We had 3 red days in a row, which, if you guys remember from March of 2024, was the signal that helped us identify the weakness forming in Bitcoin at a time when 90% of the market was talking about Bitcoin price going to $80,000, $100,000 and getting extremely bullish. That was the warning signal at that peak. And of course, the market has now been underneath that high for over 4 months. So that's potentially unfolding on the S&P 500. I want to have a look at what that means to the market. How long could this downside last? And what signs can we look out for a reversal in this downtrend? Now for a summary on the data that we tracked on the channel this week. So each of these videos that we looked at over the last week, a couple of the major things that came up, the breadth between the large caps and the small caps has begun to shrink, which is potentially signs of the bull market continuing on for the stock market. There was a lot of fear that a market can't go up with the majority of the stocks being down and only a few of the stocks taking the market higher. But in fact, that can happen. You can have a stock market going up with fewer stocks because at the end of the day, they are large caps. And when you have large cap stocks, they're going to make up the majority of the market. Therefore, the index can keep going up. And for the small caps, you can have a lot of small caps not going to new highs, and it's not going to affect the S&P 500 or the NASDAQ because, well, they don't make up that much of the entire market cap. But what we saw this week is a catch up for some of these smaller caps. You see them rising here towards the end. And now we've had a few days down on those small caps. So is this a bit of a signal to tell us that the small caps lag, as we've talked about many, many times, small caps and cryptos, or in this case stocks, that essentially are lagging the market, catch up towards the end and then correct? Because you have investors trying to find something that is undervalued, they get drawn into crappier stocks, they go up for a little while, in this case just a few days, and then start to correct on them again. Typically, you see this cycle through over and over again. The investors that were too slow to get into the major trends are trying to find stocks that are potentially undervalued, and they get in late, and then of course it all corrects on them. So that was a big one from this week. We also saw RSIs that were all overbought on 5 timeframes. That didn't seem to be an issue for the macro cycle, but on the short term, the data suggested that there would be a little bit of headwinds for the markets, and of course for the S&P 500. That's what we saw this week. We've got 3 red days now, and the week has closed out quite red, so down 2% on the week. And for the NASDAQ, it's also had a 4% correction this week after last week putting in a slightly lower close. So there was an all-time high last week, and this week just closed out 4% down. Now, another major piece of data that suggests the stock market has more upside to go is in the financial sector. 45% of S&P 500 financial stocks registered 52-week highs, so 45% or more. Comparable surges in new highs with the sector at a 5-year high, so the sector is also hitting a 5-year high, precedes a bullish outlook for financials. And when that happens, typically see the S&P 500 also go up. So S&P financials, after 45% of the S&P 500 financial sector stocks registered 52-week highs and the sector closed 5-year high. You can see over the 21 data points going back to 1954, you've got 85%, 75% hit a new high 6 months later and 12 months later. So when this signals 6 and 12 months later, you're going to get a pretty good return that the markets will be higher in 6 to 12 months. So that was for the S&P 500 financials. This one is S&P 500 after the same signal. So the previous was the financial sector. Now it's just the S&P 500. 6 and 12 months later, you got a pretty damn high hit rate. You've also got a high hit rate for these two, which are 2 and 3 months later, and not as conclusive for 1 and 2 weeks later, which you can see happening on the chart now. This is sort of that 1 week, 2 weeks later, and then we'll have to see what happens through that 1, 2, and 6 months later. So that's the data point here, where you can see you've got pretty good returns over the coming few months, 6 months, 12 months, once the financial sector heads into a new high or a new 5-year high, and 45% of those financial stocks going higher. This is just the data. There would be many reasons why the financial sector and banks are collapsing, or the reasons they should collapse. But when we just focus on the numbers, the price is going higher. And if you're a trader or investor, the only way you can make money from it is by trading the price, not by the headlines, not by the fear porn around why the market should be going down. If you are trying to trade that, essentially you're either going to be shorting the market when it's rising, or you're going to be keeping your money out of the market and watching the market go higher, which then spurs on a bull market even further, because you start to get FOMO and investors try to find ways into the market, as we've seen with the Russell. So they wait and wait and wait, and then try to find smaller caps or undervalued stocks. They get in probably too late towards those peaks and then get a correction against them. This is just looking at a broad picture over the course of history, and then basically trader market sentiment. The market sentiment, fear and greed, back down to neutral now for the S&P 500. You got the timeline here. It hit greed and has dropped back into the neutral zone. So all the while the S&P 500 has risen out of the April low, that fear low, the market has been going up. So basically 5,000 points up to 5,700 points, nearly a 15% rise, yet the market sentiment was fearful, or in basically a bit of a neutral standing. It's not sure, but the price was going higher. So I think it's quite interesting that there was only a few days of greed before it dropped back into neutral, or even heading back into fear. So that is probably in a good stance for the market to remain healthy while we go on a correction and then build back again, so you can see more of that greed come back to the market as it heads higher. So now it's time to look at this particular signal, the 3 red days. This is from our Gann swing indicator. You can find a link to this in the video description here. Check it out, 7-day free trial. You'll get an email every day showing you how to use the swing indicator. And if you want to learn more about that and how we implement it into our own trading and investing, then you got the premium membership in the top of the video description. So here, Gann swing indicator, we turn on the settings, go to the bottom here, show bar type, and that brings up these little triangles, reds and greens, and then blue diamonds and gray circles. What does this all mean? Well, if we get 3 lower highs and lower lows from a significant peak, we could potentially expect that the market is going to remain in a correction longer than previous corrections. Doesn't always have to happen that way, but just looking at the probabilities, that's what we would come to expect, that there's going to be a higher chance that this might be a longer correction. Now, we've looked at seasonality as well on the channel, with July being a potential time that we get a trading range. Maybe it does go a little bit higher and then come back into the trading range. But essentially around this time, maybe we do get a bit of a grind sideways until we get towards the election later in the year. Now, in terms of the previous signals, this one did not have a 3 days down, but it was under the previous top for about 44 days. We can go back to the previous time before that, we had 3 days down. That was 3 weeks. You can see here 22 days. These are just trading days, and this is the actual calendar days on this side. So basically 3 weeks under the top before it started to break out. And this was a very, very strong market at the time. You had the October low after there was an invasion in Israel, or basically missiles going from Iran to Israel. That was all through this period here, and more in particular this period in October. And the market basically went powered out really strong from that low. So for it to be held down for 3 weeks is a pretty big thing. Now, having a look back at previous signals as well, the 3 days down came in at the previous old all-time high. So that was January 2022, 3 days down, did not get a 3 days up, and then 10 months of a bear market. So basically all the way down from there. Now, these other times that I've got here with the arrows, you had 3 days down and they were from all-time highs. You can see that this one came in a blue top. So you had a higher high on that bar and a lower low. So this green bar here was higher and lower on the same day, which is why it gets a blue diamond. Now you got 3 red days and 3 red diamonds. So lower highs, lower lows, but it was followed by 3 greens. So 3 higher highs and higher lows. And that basically wiped out the signal. Market went on from there. Another all-time high came in, 3 red triangles and 3 green triangles followed, basically wiping out the signal. Market went higher again. We can go back to the COVID pandemic. So this was the second round of COVID stuff. If you remember back in 2020, there was obviously COVID happened here. Then there was a scare of a second mutation. No one even talks about it anymore, but that was this period here in the market. 1, 2, 3 reds, red triangles, was not followed by 3 in a row, and the market basically continued on, double bottom, and then it finally broke out, taking 68 days to go from top to top. You also had the 3 red triangles from the previous old all-time high from that just before COVID broke out. 3 reds happened again. Market collapsed from that point, and the rest is history. You know, it took another several months before it could break to a new all-time high from there. So there are several times where you can see the S&P 500 had the 3 red signals from significant tops, and it took quite some time for the market to come back from that. The only thing that reversed it very quickly, there might be some others in there, but the main thing we can see from at least this signal is that you had 3 green triangles that happened directly after the 3 red triangles. So that's going to be something that I'm going to look out for this time around over this coming week or two, mostly this coming week. And you want to see those 3 green triangles come back very quickly to invalidate this particular setup. Otherwise, we could find ourselves underneath this particular top, maybe for a month or two, like you can see from these previous signals. So that's the detail I wanted to show here. This is the major 3 red days down, or the 3 red triangles, the same signal that came up showing us at the peak of BTC. And of course, as I always do on the channel, I'll continue to follow up on that signal so that we can stay on top of the cycle happening for the S&P 500. Now that same signal has not shown up on the NASDAQ. The top came in, red down, green up, and then you have the red days. It has to come directly from the top. So we're not too concerned here with the NASDAQ, although it can also still go through a correction because it might have an overbalance in price and time. Be sure to subscribe to the channel so you can understand how we implement those for the trading. Bitcoin is at one of these major points in time where if we're going to get a significant close, it will have to happen tomorrow, and I think we will get there. Now I want to show what that means moving forward and what's happened in the past so we can get an idea of where we can go from here in the future, as of course we like to study the past to forecast the future. Now the fear and greed index is at 74, so we've got plenty of greed coming back into the markets, and I think it's probably a little premature, but it doesn't matter what I think, it matters what the market does and where the price goes. I can see that there is still some volatility in the market, therefore if we were to get a correction on Bitcoin in the short term, so something like on a daily chart, that might be enough to push this, the fear and greed index, down back into the neutral zone to hopefully wipe out this greed. Because as soon as we start to tick up to higher 70s, maybe even the low 80s, you start to get into extreme greed. And it's probably a little bit early for that. You wouldn't want to see it just bounce straight out and then head to those highs. But, you know, at the end of the day, I don't control that. I don't control your emotions in the market. So where does that leave us for the seasonality? We've hit the stock market. We've got to the sentiment of the stock market. Bitcoin market sentiment just covered there. We're going to get into this historical seasonality and then look at the patterns as well. The major thing coming up in the next 24 hours is the week closes out at a much higher price. So seasonality first. What I'm interested in here is the green line. Here is our green line. You can see what it does over this period of the year, and we are now end of July. There's August, there's September, there's the bounce back October, November, December. So this is the orange line here. You can see now we've gone down into July and then we've come back out of July, somewhere about here. And the green line shows that this potentially goes up into August without not going straight up. You can see there's a couple of tiny corrections here, and I think we're probably on the verge of another small correction like we just saw recently. So what I'm talking about there are these days. So you got a small correction here, and maybe if this happens to go to 68, 69, 70, then you would probably get a little bit more of a correction, because the total time up so far, low to high, is about 2 weeks. So should we get a correction? I don't see it coming back down and taking out these lows, but any sort of small correction would be most welcomed, at least by myself. So in terms of where we are now on this particular chart here, the green shows us dying off into August. Again, it's not a huge die-off. It's just basically a flatlining there. September's a little worse, but I think that's going to depend on how high Bitcoin actually goes from here. If it does manage to get higher, then maybe that grind out is more subdued and more of a long drawn-out trading range as opposed to a significant correction. We'll wait and see. There's obviously a few months to go there. Nonetheless, you've got a quarter four, which is essentially up on all timeframes here. So you've got the blue, the green, and well, this is the current one here. We're going to look at the black, so all years. So you can see on the black that it goes up, correction, continues. The blue, up, correction, continues. The green, a bit more of a subdued grind, but you've got an up, sideways, and then up again. So this quarter four, no matter which year we're looking at here, all years, 11 to 17, 18 to 23, essentially that time of year typically shows that Bitcoin price wants to go up through the period. But August, September isn't usually the best across all of these timeframes. So where does that leave us now, closing out the week? I think this is a better chart here. We're closing out pretty well above the 50% level. So here's the low to the high and above that 50% level. That's the important part I want to look at here. 63,600. What does that mean? Does that mean the low is in? That's the big question I want to put up to you and have a look at the data from the past. Now, this was one of the best buying opportunities this cycle. Obviously, that's the low, but it comes with risk. Trying to buy the low, do you know if that's going to be the low, or was that going to be the low, or was that going to be the low? You just don't know. But this low here, as we covered on the channel, and you guys that have subscribed, remember that there were several rules that Bitcoin met that were able to then identify that this was most likely going to be the low. Therefore, any of those significant dips on extreme fear, and March was extreme fear. It was the banking crisis. Everyone thought the market was going to collapse and we're going to go into a recession. But we bought that dip very heavily because it showed a lot of strength. You had the diagonal that it broke above. So here's the top to that line. On a log, it broke above it and then came back and retested. The market was getting towards the monthly swing tops, but it had also broken the monthly swing top in January. So you can see January took out that swing top and then got close to the next one. So it broke a monthly swing top. And the next thing was an overbalance in time and price. You wanted to see the market go up for longer and for longer in time and a higher in price as well. So basically a bigger move to the upside than what had happened previously. And so we're starting to see that occur now on almost each of these particular signals, but we need to wait until the week closes out tomorrow. So the overbalance in time and price, the diagonal is being broken and closed above at the moment, 24 hours, remember, and then also the monthly swing tops that it needs to take out. So it hasn't met all of the signals yet, but it's getting very close to those. Now it's also above the 50%. So this signal here was above 50%. You can see January closed above it, then February closed above it, and then March basically took off from there. Here is the 50% right through the middle there, 63,600, potentially going to get a close above that level tomorrow. And this is the weekly here. So we're waiting on that to get a close above 63.6. So mark that one on your charts. That's going to be another really, really strong signal. So let's look at a few data points coming out of the bear market low of 2015. You can see how Bitcoin rose, corrected, then we would look at our 50% level. So you're not going to have all the data on the right-hand side. You're living through this in real time, right? There is the top, there is the bottom. Your 50% at $395. Watch the market come towards that 50%. There are a couple of closes above it. That is potentially telling us that there is some strength in this now and that the dips are to be bought. Is that going to be true? Okay, we keep going. A couple of closes underneath, but it puts in a higher low to the previous low and then pushes back above. Another higher low forms, so you can see right there. And the closes all begin to remain above 50%, buying up the dips, buying up the dips, buying up the dips. You don't get a close underneath 50% again, and before you know it, it's broken away. 519 on the next close, and the rest is history from that point. So you can keep doing this over and over again. Looking at the next peak, you get this significant correction. Here it is, there's the low. Look at how the weekly chart does not get any significant closes above that 50% level. Here is one, it was a few dollars above, and then quickly closes underneath the level. Then it goes on another correction. Come back down, watch how it plays ball with the 50% level almost exactly. So if you know how to use this, again, 50% level, it is going to dramatically change your trading and investing. Use it on a longer term time frame, a weekly chart, maybe even a monthly chart if that's how you want to play the game, and you'll be able to create better plans that suit your needs. If you want to learn about this, it is in the top of the video description. TIA Premium, we've got a sale up this week, so make sure you are subscribed to the email list and you'll be notified when that sale goes live. So this is all part of what we do in TIA Premium, teaching how GAN traded and how you can remain on the right side of the market as long as possible. $1,100, you get the correction down to $750. Watch it come back, close above, and then no more closes below that level. Now I can keep doing this over and over and over again throughout the entire cycle. And then once you see the price break down from that 50% level and not able to put in more closes above it, things are beginning to change. That seasonality, that cycle is beginning to change, and now it's turned into a bear market. See how the market is not able to close above the 50% level and becomes weaker and weaker. That is a clear signal that you probably don't want to be getting into this market just yet. And what do you know? It collapses from there. So where are we at now with Bitcoin? Well, we're attempting to close above this 50% level. So as I said earlier, we could see it come back down, but what you want to see is a higher low form and then more weekly closes back above $63,650 if you're looking at Kraken. And so once that continues to form and play out, then we've got a nice strong foundation forming, and I'd say that we're going to hit this sort of 4 to 6 month period and break out to the upside. Could this happen next week? Of course it could. It can continue blowing through the tops, and then we would get those signals that the market is well and truly on, a break out of the diagonal, a close above the 50%, a overbalance in time and price. So we got the price to the upside, and then time you need to do longer than this one here. So this was 5 weeks up, looking for that 5 weeks. And essentially it's game on again. And you've got that strength showing back up in Bitcoin. But tomorrow is going to be the real interesting close here. It's at 67,000 as I'm recording this. I'm going to be traveling tonight, so I won't be able to see it tomorrow until in the afternoon. But I'll be back on Tuesday to record you another update. There is your key number again, 63,650 for BTC. This is going to be the big one for this next stage. So 24 hours, keep a lookout for it. Let's have a look at ETH and Solana as the video has gone on pretty damn long. ETH is above 50% at the moment. This is on the daily chart. So 3,450 on the weekly chart. again, that's where you're looking for it to close. Remember, over the last week or two, you can see the ETH price tested it and closed under, and again closed under. Put in a higher low, testing the 50% level yet again, and we've got one close above it on Friday. And then I don't like to put too much weight on the weekend closes. You can see the volume typically drops off on the weekends. Look at that. There's your Saturday, there's your Sunday, there's a Sunday, there's a Saturday. Basically, it's a bit weaker on the weekend, so I don't put too much emphasis on it. But nonetheless, it is still attempting to close above those levels, possibly because Friday closed above that level. So again, 18 and a half hours to go, 3,450. ETH BTC still holding above the 50% levels only just, but it does look slightly stronger than what happened last time when it had this nice big bounce. It basically collapsed from that point, whereas this time around, it's taking a little longer and a little more drawn out, but still holding that base up. Now, Solana, on the other hand, is showing much more strength to the upside. You can see it testing the 50% level. This is against its BTC value, and then I'll show you on the USD value. Each of the times here, it's made a higher low. Look at these lows form in February, March. This one here was April. That was when I put out that tweet that said it looks like altcoins are forming higher lows. Some altcoins didn't make it and they kept going down. People were really focused on those ones that didn't make it. I think it's important to focus on the ones that are making it. There's your April low. And then we had the recent June, July lows, and it put in a higher low against BTC and subtly is climbing back above 50% levels. This 50% level is the current low to the top. It's very, very close. Yep, there it is. Basically, that's the low there. Top 50% was 245, and now it's attempting 257. So some closes above this top, and which would then also make it above the 50% level, would be quite strong for Solana at this stage. Now let's have a look at Sol USD. Wow, 173. So we've now met the $165. That gives us another confirmation, and you can see the insurance premium here by the breakout is less emotional, meaning you don't have to go through those trader emotions. You've got more reassurance that the lows are in and that eventually the price will go higher on a time frame more or less like sort of weekly, monthly. Yes, you can still have a few days down here and there, but if you're trying to buy underneath these levels, like we saw, you could potentially buy a dip, comes back down, and buy the dip again, it comes back down, and that sort of creates a lot of emotional damage. If you're trying to be in this game long term, you want to avoid that emotional damage. As you guys might have already experienced, that can start to screw your trading, and if you're worn out now, imagine what happens when we go through another one of these. It's going to be very, very difficult to hold on for the ride because you are mentally drained from all these ups and downs at a time that it isn't even that important. So it's not that important while it's still trying to decide what it does, just as long as you keep watching the market daily so that you can act on your plans when those signals arise. That's your signal to hit the like button. Subscribe to the channel if you haven't already. Links in the video description as I talked about throughout the video. Thanks again for tuning in to my office here in Jakarta, and I'll be heading back to Australia tonight. So I'll see you back in Australia at the next video. Thanks again, guys. Take care and peace out.